Ma'arifa.
Bismillahir Rahmanir Rahim. So let us now understand about the history of Sukuk. The origins of Sukuk date back to the classical period between 700 to 1300 AD, when papers representing financial obligations from trades and commercial activities were issued. A Sukuk aligns well with the verse 282 of the Holy Quran, which encourages written contracts for financial transactions. The term sak, which is singular of Sukuk, right? This is an Arabic word, sak, was used to describe documents representing financial liabilities. In 1988, the Fiqh Academy of the Organization of Islamic Conference laid the foundations for Sukuk market, stating that assets could be represented in written financial instruments and sold at market prices if they were primarily tangible assets. So this was in a way a kind of start for the modern Sukuk market. The first Sukuk was issued in 1990 by Shell MDS SDN Berhad in Malaysia, valued at 125 million Malaysian ringgit. So this was in a way a first Sukuk which was issued, so 1990. The first international US dollar Sukuk was issued in 2001 by Kumpulan Guthrie Berhad, worth $150 million. In 2001, the Bahrain Monetary Authority, now the Central Bank of Bahrain, became the first government-related entity, that is a GRE, to issue a Sukuk, right? So in 2001, that was the first government Sukuk which was issued. Now, following this, sovereign Sukuk were issued by multiple sovereigns, for example, Malaysia, Qatar, Pakistan, UAE, attracting international attention and driving global growth in the Sukuk market. So this was a kind of opening of the doors for the various sovereigns across the world, in the Muslim world, to raise liquidity through the capital markets in the form of Sukuk. The Arabic dictionary Al-Wasit defines Sukuk as an identified paper representing the financial right of its bearer. Some scholars believe the word check, right, is derived from sak. So some scholars also interpret that this word check, which is modern in the modern usage and jargon, has its origin to this Arabic terminology of Sukuk. Now, Sukuks are certificates that reflect participation rights in an underlying asset. The holder of the Sukuk has an ownership interest, be it beneficial or legal, of an asset for a defined period of time. And because of this ownership interest, the Sukuk holder is entitled to benefit as a return on the investment which the Sukuk holders does. As I said, they represent proportionate beneficial or legal ownership of an asset for a defined period, transferring the associated risk and return of the Sukuk to the holders. So because there is an ownership of the asset, there is a risk transfer of that asset to the whole Sukuk holder, and hence he becomes entitled for a return. Sukuk basically facilitate the liquidity conversion of assets without complex legal procedures. So it's basically a kind of conversion of an asset. You liquidate that asset in the form of raising liquidity against that asset. The design of Sukuk is similar to securitization in conventional markets. So when we look at the ABS market, the asset-backed securities market, so it is similar to that. So basically you are securitizing the asset, you are selling the ownership of the asset to multiple investors, and because the multiple investors have an ownership interest in that asset, anything which generates from that asset becomes the entitlement of the Sukuk holder. So this is the whole logic of how we structure the Sukuk as a product proposition. Sukuk is being defined by various bodies. IOFI, which is one of the important and the main bodies, right? Let us see how IOFI defines Sukuk through its standard 62.2.1. So basically IOFI says the certificates of Sukuks are investment securities of equal value for common share that establish ownership of assets. Now these assets could be tangible assets, usufructs, rights, debts, cash, or a mix of all. So this is important. And another important point is that they are already in existence or that will be acquired or created. It will implicate rights for the certificate holder arising from its interest in ownership of those underlying assets and obligations on the certificate holder to the extent of its share in them. Meaning to say that if I as a Sukuk holder invest in a Sukuk, I have the ownership interest of that asset, and because of this ownership interest, I become entitled for a return which generates from that asset. So in a nutshell, this is how Sukuk is defined. Now let us also quickly look at how Islamic Financial Services Board, which is IFSB, which is a body in Malaysia, how they define Sukuk, right? So for them, the definition goes this way. Sukuk, frequently referred to as Islamic bonds, are certificates with each sak, that meaning to say the Sukuk, representing a proportional, undivided ownership interest in tangible assets, or a pool of predominantly tangible assets, or a business venture. Now these assets may be in a specific project or investment activity in accordance with Sharia rules and principles. So this is how IFSB defines a Sukuk. Let us quickly also look at how the Malaysian Debt Securities and Sukuk Market, which is the BNM, defines Sukuk. These are certificates of equal value that represents an undivided interest, meaning to say the proportional to the investor's interest, in the ownership of an underlying asset, both tangible and intangible, usufruct, services, or investment in particular project or special investment activities. Now lastly, let us also look at how the Securities Commission of Malaysia, which is again a very important body. Why I'm emphasizing on Malaysia is because Malaysia is a very dynamic market for Sukuks, and it's a very substantial market for Sukuk. Now let us see how Securities Commission has defined Sukuk. So their definition goes this way: any securities issued pursuant to any Sharia principles and concepts approved by the Sharia Advisory Council. Right? So this is how briefly the definition of Sukuk and how they are defined by various bodies at a global level. Now it's also important for us to look at the differences between the Sukuk and bonds. So let's understand the basic difference between bonds and Sukuk, right? So on the left hand side, let's look at the parameter and then conventional bonds and Sukuk. So let's start with asset ownership. Bonds don't give the investor a share of ownership in the asset, project, business or joint venture they support. They are a debt obligation from the issuer to the bondholder. But on the Sukuk, it's a different. Sukuk give the investor partial ownership in the asset on which the Sukuk are based. Let's look at the investment criteria. Bonds can be used to finance any asset, project, business or venture that complies with local legislation. But on the other hand, in Sukuk, the asset on which Sukuks are based must be Sharia compliant. Let's look at the issue unit. Each bond represents a share of debt. Each Sukuk represents a share of underlying asset. On the issue price, the face value of the bond price is based on issuer's creditworthiness, including its rating. On the Sukuk, the face value of the Sukuk is based on the market value of the underlying asset. Now, in terms of the investment rewards and risk, bondholders receive regularly scheduled and often fixed rate interest payments for the life of the bond, and their principal is guaranteed to be returned at the bond's maturity. On the other hand, Sukuk holder receive a share of profits from the underlying assets. This is how the return in the Sukuks is there. Now, effects of costs. Bondholders generally aren't affected by costs related to the asset, project, business or joint venture they support. The performance of the underlying asset doesn't affect investor rewards. But on the other hand, the Sukuk holders are affected by costs related to the underlying asset in a way, and we can explain this more detail when we are covering the structure of the Sukuk.
معرفة